Hello viewers, welcome to my channel. I'm Hashim Ali Khan. So now I'm going to start the main problems on other receivables and other payables. 4 videos I have already uploaded on short questions and MCQs on other receivables and other payables. Now I'm going to start the main problems. But again, I'm stressing you all that before starting the problem, you must be aware about the concept of other receivables and other payables. So first 2 videos I have explained you in detail regarding what are other receivables and what are other payables. How the adjustments, accrual adjustments should be made. Until and unless you are clear about these concepts, you should not go to the problems. So other receivables and other payables. This requires the adjustments for accrual concept. According to accrual accounting concept, all the incomes and expenses of the current year should be considered in calculating the profit. Only current year's incomes and current year's expenses. If any income, if any expense is due, that will be added. If any expenses are paid in advance for the next year, that will be deducted. Similarly, any incomes to be received for the current year will be added. Any incomes which is received in advance will be deducted. All these adjustments should be made while calculating the profit. So a student must be aware about which item to be added and which item to be deducted. So in short questions, many problems I have explained you how to make the adjustments accrual. Now, the main problems I'm going to start. So before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So sheet of the main problems I have already uploaded in the drive. So take a printout, keep it ready before start watching the problems. Now first problem, main problem I'm explaining you. Concentrate on the problem. During the year ended 31st March 2019, the year ends on 31st March 2019. So year will begin from 1st April 2018. The following rental income was received. Here rental income, rent received, it's an income. So details are given. 1st April 2018, $800 are received for 4 months ending 30th June 2018. So 1st April, $800 were received for 4 months, and these 4 months are ending on 30th June 2018. Next, 1st July 2018, $1,500 are received for 6 months ending on 31st December 2018. Next one is on 1st January 2019, $1,500 were received, and this is for 6 months ending 30th June 2019. Like this, 3 amounts are received. 3 amounts are received on different dates for different months. Now prepare the rental income account for the year ended 31st March 2019. Balance the account on that date and bring down the balance on 1st April 2019. The first question, you are required to make a rental income account, right? And we close the accounts on 31st March 2019 and bring down the balance on 1st April 2019. That's what. Second question, complete the table by indicating with a tick what the balance of rental income account represent on the given dates. So 2 dates are given, balance at 1st April 2018, beginning of the year, and balance at 1st April 2019, end of the year. So what the balance denote? Is it accounts per the other payable or other receivable, current asset or current liability? We have to decide and put a tick. This is a complete problem. First of all, we have to make the rental income account. So here you can see main problems. First problem, a rental income account. So it's a ledger account. We have 2 sides, debit side, left hand side, debit side, right hand side, credit side. So here I am writing DR, debit side, and this is the credit side. So 3 columns you have to open on debit side, 3 columns on credit side. The 3 columns are date column, details, dollar. These three columns are on debit side. Three columns on credit side, date, details and dollar. Now we have to see the opening balance. 1st April 2018, the person, the sole trader, the businessman has received $800. And this $800 is for 4 months ending on 30th June 2018. 4 months are ending on 30th June 2018. Means when it was started, March, April, May, June. Ending on 30th June. So this $800 rent is received on 1st April, ending on 30th June 2018. So it means this 800 is for 4 months from March, April, May, June. Our year begins from 1st April. Year begins from 1st April. But this rent is received from March. That means for the month of March, rent was not received. Last year's March rent. March 2018 rent was not received. Now it is received. When it is received? On 1st April 2018. So 200, 800 divided by 4. Because 4 months rent is 800. So 800 divided by 4, you will get 200. So monthly rent 200. So 200 for March, 200 for April, May, June. $200 monthly, right? So on 1st April, the March rent was due. March rent was receivable. So that's why debit side balance brought down $200. On 1st April 2018, balance brought down 200 for 1 month, March month, right? Now, the other months received. Now, whatever rent is received, the entry will be bank account debit, rental income account credit. Always keep a notebook while watching this video so that whenever I say important point, you must write it down. I am the businessman. I am receiving the rent. So I debit bank account. Bank account debit, rental income account credit. So rental income account credit side. I am taking cash book, bank. How much 1st April, how much amount is received? $800. So I have taken $800. Next, again on 1st July 2018. So July 1st. Again, cash book, bank. How much is received? $1,500. Next is 2019 January 1st. 2019 January 1st. Again cash book, bank. That is 1,500. Yes, 1,500. These are the three receipts given. The businessman has received the rental income on 1st April, 1st July and 1st January 2019. Right? Now, the last one. On 1st January 2019, $1,500 were received for 6 months. Ending 30th June. We are closing the accounts on 31st March. But the rent is received up to 30th June 2019. So how many months ahead? After March, April, May, June. So 3 months are falling in the next year. That means this income is received in advance. We are closing the accounts on 31st March, but we have received the rent up to 30th June. So 1,500 is for 6 months. So 3 months. It will be 1,500 into 3 by 6 or half of 1,500. 750 rent is received in advance. 750 rent is received in advance. When rent is received in advance, it's a liability. Income received in advance is a liability, and all liabilities will show credit balance. The liabilities will show credit balance. So here I am taking, this is the total balance brought down 750. This is on to 2019 April 1st. Now here balance carried down 750. This is the last date 2019 March 31st. So we have received $1,500 for 6 months. So 3 months it is half. 1,500 half 750. So 750 is received in advance because it is going up to 30th June. We are closing the accounts on 31st March itself. So 3-month rent is received in advance. When rent is received in advance, it becomes a liability. The liability will show credit balance. So credit side balance brought down 750, 2019 April 1st. When brought down is on credit side, carried down will be taken on the debit side. That's all. Now remaining balance should be transferred to income statement. Remaining balance should be transferred to income statement. Now the total on the credit side total is 3,800. The total of the credit side is 3,800. Same 3,800 you take it here. From 3,800 deduct 200 and deduct 750. Minus 200 minus 750. Your balancing figure is 2,850. So here I am writing 2,850. 2,850. This will be transferred to income statement. This is the balancing figure. This is the last date, that is 2019 March 31st. At the end of the month, 2,850 will be transferred to income statement. This is the rental income for the current year. This is the rental income for the current year which is transferred to income statement. That's it. Now, second bit. First bit completed. Rental income. Opening balance debit side because this is the rent receivable. And end of the year it is rent received in advance. That's why I am taking on the credit side. The balancing figure. Whatever rent is received, it will be taken on the credit side. That's it. Now, put the tick mark regarding the balance. Which is other payable, which is other receivable. See here. First of all, beginning of the year. 2018 means beginning of the year. 2019 means end of the year. Right? Now, other payable. First of all, at the beginning of the year, 200 rent was receivable. Rent receivable. The beginning of the year 2018, it is other receivable. Other receivable. Beginning of the year. And end of the year, rent is received in advance. When rent is received in advance, it's a liability. It is payable. Other payable. Rent received in advance 750 is payable end of the year. So 2019 it is other payable. Put a tick mark. Now other receivable. Other receivable is a current asset. So current asset, other receivable. And other payable is a current liability. So current liability, other payable, I am putting a mark here. That's it. So other payable is a liability. Other receivable is an asset. That's all. This is the end of problem number 1. Now I am going to start problem number 2. Second problem. Xiao Wong, a sole trader, provided the following information for the year ended 31st July 2018. The year will begin from 1st August 2017 and year end on 31st July 2018. So we are given the balance beginning of the year 1st July 2017, end of the year 31st July 2018. Rates 350 advance and rent paid 250 in arrear. Rates and rent both are expenses, payments, and rent received is an income. So 3 items are given in which 2 items are expenses, 1 item is income. Rates and rent paid are expenses. Rent received is an income. We are given the opening and closing balances for all rates, rent paid and rent received. During the year, the following transactions took place. So rates. On 1st August 2017, rates paid $1,800. On 1st Feb 2018, paid $200 rates. For rent paid, 1st October 2017, rent paid $1,600. On 1st April 2018, rent paid $2,200. Rent received. On 1st September 2017, rent received $850. On 1st March 2018, rent received $250. These are the transactions took place during the year. Next page. All receipts and payments were processed through bank. Through bank we are getting the money. Prepare the rent and rates account and the rent received account. So two accounts it is asking you to make. First account is rates and rent paid, because rates and rent paid both are expenses. So we club it. Rent and rates we club it. We make one account. And rent received is an income. So we will make a separate account for rent received. So two accounts. One account rates and rent paid. One account. Second account rent received account. So and showing the any transfers to the financial statement. Balance the account on 31st July 2018 and bring down the balance on 1st August 2018. Just like the previous one. Explain why Xiao adjusted the amounts received for rent for the year 31st July 2018. Why all these adjustments are required for rent paid, rent received? Why we have to make the adjustment? That is the second question, explanation we have to give. Come on. First of all, we make the accounts of rates and rent paid. Rates and rent paid. Now, see carefully here. This is the second problem. Xiao Wang, rent and rates account. This rent and rates account is an expenses. And secondly, rent received account is an income. The blank account I have opened, debit side date details dollar. Credit side date details dollar. Now first of all we'll take the opening balances. The opening balances you can see the problem on 1st August 2017. 1st August 2017 rates 350 in advance. When expenses are paid in advance, it's an asset. Prepaid expenses is an asset. An asset will show debit balance. Write it down the points. So when asset is there, it will show debit balance. So this 350 in advance will show debit balance. So 1st August 2017, balance brought down 350. These are the rates paid in advance at the beginning. And rent 250 in arrear. In arrear ka matlab outstanding, due, owing. So rent paid is owing. How much rent is owing? $250. So owing is a liability. Arrear is a liability. And all liabilities will show credit balance. Assets will show debit balance. Liabilities will show credit balance. So here rates paid in advance is an asset. Debit balance. Similarly, rent in arrears is a liability. Rent in arrears means rent due is a liability. How much is the liability? $250. So here I have taken 250. So debit side, balance brought down 350. These are the rates. And balance brought down 250. This is the rent. Rent is arrear. So that's why credit side. These rates are in advance. So debit side. Opening balance we have taken. Now closing balance is also given. End of the year. End of the year 31st July 2018. So at the rates 200 in arrears. So what I will do is I will close the account like this. Now end of the year 31st July 2018, rates are 200 in arrear. In arrear means outstanding. It's a liability. So here I will write down balance brought down. How much is in arrear? 200. This is the last grade. Next year 2018 August 1. Next year 2018 August 1, balance brought down. When balance brought down, we have taken on credit side. So carried down will be on the debit side. So balance carried down 200. This is last date 2018 July 31st. 2018 July 31st is the last date. So on last date $200 is in arrear. Which arrear? Rates. Now similarly, rent in advance. Rent in advance. When expenses are paid in advance, it is an asset. So assets will show debit balance. So debit side I am taking balance brought down. How much is advance? 180. So here I have taken 180. So this is 2018 August 1. That's it. So brought down is on debit side. So here carried down is on credit side. Balance carried down 180. This is last date 2018 July 31st. That's it. So opening balances we have taken and closing balances we have taken. Whichever is an asset, it will debit balance. Whichever is a liability is a credit balance. Arrear means liability, advance means asset. Here one item is advance, rent paid is in advance, so 180 debit side. And rates are in arrear, so it will show credit balance, credit side. That's it. So opening and closing balances we have taken. Now we'll come to the transactions. So during the year the following transactions took place. Rates are paid. Rates are paid. When payment is made, the entry will be rent and rates debit, bank account credit. When we receive the amount, bank will be debited. When we pay the amount, bank will be credited. When bank is credited, rent and rates will be debited. Rent and rates debit, bank credit. So debit side I am taking. First payment is made on August 1. Cash book. Bank. How much is the amount paid? Rates 1800 paid. After August, rent paid October 1st. Again cash book. Bank. How much is the rates paid? $1600. Next comes February 1st, 2018. So 2018 February 1st. Cash book. Bank. How much is the rates paid on 1st Feb? $2,000. Next comes rates paid on 1st April 2018. So April 1st cash book. Bank. How much is the rent paid on 1st April 2018? $2,200. I have taken all the 4 payments. 2 payments are made for rates, 2 payments are made for rent. So totally 4 payments, all the 4 payments I have taken date-wise. Payments over. Now, that's all. Now the balancing figure should be transferred to income statement. Take the total of the debit column. The debit column total, it comes to 8,150. This is 8,150. Here also take 8,150. From 8,150 minus 250 minus 180, the remaining balance will be transferred to income statement. Balancing figure. Now the balancing figure comes to 7720. This is the last date. Last date is 2018 July 31st. That's all. So we have taken the total on the debit side 8,150. From 8,150 minus 250 minus 180. The balancing figure is 7720. Account is closed. Finished. Rent rates and rent over. Now rent received. Now we'll come to the second point. Rent received. Rent received opening beginning of the year 150 in advance. When rent is received in advance, it's a liability. Rent received in advance, income received in advance is a liability. Liability will show credit balance. So credit side balance brought down 150. And end of the year again 200 in advance. So beginning of the year rent received in advance, end of the year also rent received in advance. So what I am doing is I am taking the closing balance. Right? So here also, beginning of the year 150, end of the year balance brought down. How much is end of the year? 200. So next year will begin from 2018, that is August, after 31st July, August 1st. Same. So brought down we have taken on credit side. So carried down. Balance carried down. It is 200. That is 2018 July 31st. End of the year. So opening and closing balances we have taken for rent received. Now amount received. Transaction for rent received. 1st September. When we receive the rent, bank account debit, rent received credit. Just now I told you when we receive the cash, bank will be debited. When we pay the cash, bank will be credited. Here cash is received. So bank account debit, rent received credit. So here I will write down cash book. Bank. Cash book, bank. So how much is the amount received? Rent is received now. 2 dates. 2017 September 1st. September 1st. $850. Then again rent received on 1st March 2018. So 2018 March 1st. Cash book. Bank. How much is the amount received? $250. So 850 and 250. These two amounts are received. So that's why credit side 850, 250. Or now we have to find out the balance. The balance will be transferred to income statement. You can take the total on the credit side. The credit side total is 1,250. Here also take 1,250. From 1,250 deduct 200, you will get 1,050. This will be transferred to income statement balancing figure. This is on the last date, 2018 July 31st. That's all, 1,050. Or, so we have completed rent and rates account and rent received account. Now last one is, it is asking you why all these adjustments are to be made. Why all these adjustments are to be made? Because we are following accrual accounting concept. In accrual accounting concept, we consider only current year income and current year expenses. Any incomes or expenses not related to current year will be transferred to the next year. Will be removed, will be excluded. Right? So here, Xiao has applied the accrual concept as he was accounted correctly for rent received, which relates to that financial year, with any balances for the previous year and next year being excluded. Any balances of the last year or any balance of the next year will be excluded because we are following accrual system of accounting. That's it. So two problems I have explained. Now third problem. Problem number 3. Raj Patel had the following balance in his books on 20th November 2011. Rent received 22,000 credit balance. So he is having a rental income, rent received. So it is having a credit balance 22,000 on 20th November 2011. Raj's financial year ends on 30th November 2011. Closing the accounts every year on 30th November 2011. And during the final week of November, his tenant paid a further 2,000 to cover the outstanding rent for November and further 2,000 to cover the rent for December 2011. That means 2,000 plus 2,000, 4,000 rent is received during December. Prepare the rent received account for the month of November and clearly showing any transfer to income statement. Balance the account on 30th November and bring down the balance on 1st December. Explain the accounting concept Raj has applied. We know accounting concept applied for other receivable, other payable is the accrual concept. He has applied accrual concept. Now, you can see here rent received account. Rent received account, date, detail, dollar, date, detail, dollar. It is given in the problem 20th November 2011. There is a credit balance of 22,000. So here I have taken 20th November 2011, balance brought down 22,000. Balance brought down 22,000. Now during the year, during the month of November, $4,000 have been received. So entry will be bank account debit, rental income account credit, rent received account credit. So credit side I am taking cash book bank. So totally how much amount is received? $4,000 are received during November 30th. So totally $4,000 are received. But in this 4,000, 2,000 is the rent for December. December means next year, because we are closing the accounts on 30th November. Our year ends on 30th November. But the rent is received 2,000 for December. That means this 2,000 is received in advance. When any income is received in advance, it's a liability. Income received in advance is a liability. So 2,000 is a liability. I'm taking it on the credit side. So balance brought down 2,000. So next year will begin from 2011 December 1st. The year will begin from December 1st. Year ends on 30th November. So this brought down is on credit side. So carried down will be on the debit side. Balance carried down 2,000. This is 2011 November 30. November 30. So $2,000 is for December. December means next year. That's why credit balance. Income received in advance is a credit balance. Now take the total. Here 22 plus 4, 26,000. 26,000. From 26,000 deduct 2,000. So 24,000 is the amount transferred to income statement balancing figure. This is the last date, 2011 November 30. Over. That's all. So we have completed the account, rent received account. Now second question, why? Explain the accounting concept Raj has applied. Raj has applied accrual or matching concept. It is called accrual or matching, both mean same. So rent in advance will be shown as an income in the next year income statement and will be shown as a current liability on this year's statement of financial position. The rent 2,000 received in advance is a current liability. It is other payable. That's it. Now, fourth problem. On 1st December 2017, Link's rent expense account had a balance of 6,900. Here, rent is an expense. Previous problem, rent was an income. Rent received. Here, rent is an expense. So, it is showing a debit balance of 6,900. When on 1st December 2017, this is the account, rent expense account. Debit side, balance brought down 6,900 opening balance. On December 1st, 2017. On 10th December 2017, Link paid a check of rent of 900 for 3 months ending 28th February 2018. So $900 are paid for 3 months. So monthly 900 divided by 3 is 300. So monthly $300 and 3-month rent had been paid $900 ending on 28th Feb. Prepare the rent expense account for the year ended 31st December 2017. Accounts are closed on 31st December. But this rent is paid up to 28th February. So January, February. 2 months rent is paid in advance. 2 months rent is paid in advance. Monthly rent how much? 300. Because 900 divided by 3 is 300. So 2 months. So 300 into 2, $600 is the rent paid in advance for the next year. So when rent is paid in advance, it is an asset. An asset will show debit balance. So here I am closing the account first of all. I will take it balance brought down $600. Next year 2018 January 1st. This is the next year. So brought down I have taken on the debit side. So carried down will be taken on the credit side. Balance carried down 600. So it is 2017 December 31st. $600. That's it. Now, nothing is given. 22,000. This one. So 900. Link paid a check of 900 for 3 months. When rent is paid, the entry will be rent account debit to bank account credit. The rent account will be debited, bank account will be credited because cash is paid. The rent account debit side, cash book. Bank. Totally how much rent is paid? 900 rent is paid. Right? So on which date it is paid? Here it is given. Link paid a check of 900 for 3 months ending. This is paid on 10th of December. 10th of December it is paid. That's it. Now take the total on the credit side. 6,900 plus 900. It comes to 7,800. Here also 7,800. 7,800 minus 600. 7,200. So 7,200 will be transferred to income statement. Balancing figure. Income statement, balancing figure. That's all. Over. This is the end of problem number 4. Take a screenshot, then I'll explain once again. We'll close this video. Inshallah, the next problem we'll do it in the next video. Take the screenshot of the complete solution. So this is the first main problem. Remember, this other receivable, other payable, this chapter is little bit difficult. Only if you watch once, you may not be able to understand. So watch the video twice, thrice, 3, 4 times. Then definitely you can be able to get the complete knowledge of how to adjust the other receivables and other payables. The main contention is only current year's income and current year's expenses should be taken. Any income or any expense not related to current year, if it is related to next year or if it is related to last year, it should be excluded. And the point you have to remember, if expenses are paid in advance, it's an asset. An asset will show debit balance. Asset will show debit balance. If the expenses are due in arrear, outstanding, it's a liability, and liability will show credit balance. That point you have to remember. And whenever I give the lecture, always keep a notebook beside you. Whenever I say something, immediately, roughly, you will make a note of it. Then only you can be able to get the complete command. Otherwise, if you watch casually without much seriousness, you cannot be able to understand the concept of other issue. So comparatively, this chapter is a little bit difficult. Have some patience and give full concentration. Definitely you can be able to understand. Inshallah, we'll continue the next problem in the next video.